now. And the future is Tesla. No surprise, they got included on the S&P 500 a little bit earlier than projected, for me at least. I was thinking more like Q1, after another solid Q4 earnings, but came early, which is fine. We had about 100 shares running on Tesla, and actually, I'm thinking about buying more in the pre-market. Now, and the reason I want to do that is because I can see the scenario playing out. What happens in this scenario? This isn't a buy the hype, sell the news in one day scenario. This is the fact where it's going to gap and go. Okay, it's going to start pumping up, and pre-market I expect even, and then when it opens, it's going to pump up even more, and then the traders are going to drop out. It's going to kick down, and it's going to probably bleed up all day long. So anyway, that's the strategy that I have in place for Tesla right now. I'm going to add, I have 100, I'm going to add probably another 100 shares. So another 30, I'm sorry, about 45 to 50,000 depending. And this is why you have to keep money on the sidelines. It's important, always keep money on the sidelines, because then you don't have to sell some position and then open another position. It's not a complicated thing if the cash is ready to be deployed. Huge. I talk about that in past videos all the time. Keep money to deploy in case you have, good situations. Basically, you can see that pre-markets are, you can see the huge bar on here. Let me blow it up a little bit. Hopefully you can see this. Okay, let me move this around a little bit so you can see what's going on. Okay, you can see the bar. I mean, they're painting the tape right here, and it's showing it's going up 458. It basically was at 465. Now it's coming back down to mid 458 or so. This is super early. Right now it's 4:02 a.m. and this is when on Schwab it starts showing basically some pre-market. I can't really do anything pre-market until about 7 a.m. That's when Schwab will execute orders. So I actually looked that up because I was like, what's going on here? Anyway, so let me pull that up. I was also looking at the short interest. Okay, the short interest on Tesla is kind of interesting too. The short interest is showing was up around 29, 27 and dropped down to about 20. I expect the short interest to drop severely. Okay, there's going to be a lot of shorts that have to cover now, because over the next couple months you could see buying into, or at least month or so, you can see buying into the S&P inclusion on, I guess, December 21st. So just in case you didn't understand what this really means, is now all the S&P indexes are basically going to have to add over 100 million shares total through all the indexes approximately. A little bit over 110 million shares. I ran the calculations on basically what they need to purchase to put them in the S&P, and also did some research on some other channels and everything as well. Watching Rob Maurer's channel Tesla Daily, and he laid it out, and I checked it before I saw his channel, and he basically had it right down to where I had it. So like 113 million shares or something like that. Anyway, point being is that has to be bought. Okay, and check his channel out, check his latest video, and you'll see what I'm talking about. And it's not like they have a choice. They have to add it in to balance the index. So, but anyway, the short interest looks like it looks like it had been pretty high. So I can see the short interest dropping pretty low, potentially down. You can see down to maybe even 13 or 12 or even lower potentially. I mean, so there's going to be a lot of short covering here. So that will drive, purchasing. And the reason I'm thinking it's going to be a gap and go, you're going to have a lot of shorts they're going to have to cover first thing in the morning, potentially. They're going to have to start covering, which will drive it up further and further. Not to mention, the media is going to be blasting this all over the place. It's going to drive it up even further. So as a trade, this is a good trade as well. So I'm just trying to add another 100 shares or so just over time, maybe over the next month or two, depending. You know, I might trim back here and there depending on if I'm investing in something else. But right now I'm trying to diversify the portfolio. And that's something I wanted to show you a little bit, is some diversification. Okay, so what I'm doing here, let me shrink that out, get rid of the Tesla chart for now. And that's crazy. You can see it. Let's see where it's at 458. So it's not going to move really fast, because who's up at 4 o'clock trading? Not a lot of people. Anyway, yeah, that is a bar. Take a look at, where's the closest bar? See that? See the split bar? That's about as close to a smash as the split. It's the split bar. So that is a beast. I mean, it's already up 12%. You know, so you think, wow, that's crazy. Why would you buy it when it's already up 12%? Well, because I'm pretty sure the stock's going to go up at least 20% total over, you know, the next time frame that I'm guessing into. Okay, so, you know, so I mean, that still leaves 8% more, even if it took a month to get that 8%, which it might only take a few hours potentially today. It could go up to 20% today, possible. That's possible. You know, I don't know if that's likely, but anyway, that's my opinion. It could potentially go up to 20% today. So I wanted to show you some of the portfolio stuff that we're doing. Okay, and this is one of the accounts that we're dealing with. And let's see. So you can see Tesla, we have 40 shares in that account. SI, Silvergate. Okay, you can check the chart on. Actually, let me pull it up. I'll show you why. Okay, you see anything wrong with that chart? Okay, uptrend, looking solid. I mean, a couple sell-offs, but super strong. And if you study anything about the company, they just, you know, hit like 800% on a lending product on theirs, and that's just huge numbers. Palantir is another new one that I got into. I started getting into it around 12, and then, you know, made some profit, ducked out a little bit because it was looking a little shaky. You can see these bars, and then it bought back in, and now I'm really strong on this company. I did some research on it. I'm looking more long term. This is another long term. SI is more long term, and maybe mid to long term, meaning, you know, 3 months to a year to potentially 2 or 3 years, depending. You know, and so anyway, you can see this chart's looking pretty sporty. Okay, it broke out and it's heading up. There's not a whole lot of negativity around it. So we have 700 shares of that in this account, 400 shares of Silvergate, and let's see. Oh, we're doing Apple. You know, this is the first time I've really gotten into Apple. But the reason I'm getting into dabbling in a little bit of Apple is, obviously, we're going into the 5G. So if we're going into 5G, Apple's going to start blasting out tons of new phones, and I just think it's going to be a big move for the stock. You know, maybe 10, 20, maybe even 30% move. So this might be more of a short to midterm, essentially. But let's see. And then I got ISRG, which is Intuitive Surgical. Okay, and Intuitive Surgical, I've always liked this company. This company has just crushed it for years upon years upon years. I mean, you can go back and it was down to like $7 a share. And it's at $758 a share now. But what I like about it is that it looks like it's trying to break out here. You can see the W here. It looks like it might break out here. This is just a stock that long-term, I'm trying to diversify. I don't want all tech stocks. Okay, so I need some biotech and I need some healthcare pharma. So anyway, and then Google. Well, Google had a monster earnings report, and we already had some Google. So I just kind of added to the position a little bit more. Okay, and you can see Google's super solid right now. I'm not too worried about Google. They're basically all-time highs. Net is another one I started getting into because, once again, love the chart. Everything looks solid. There's a little bit of weakness, but I mean, I'm liking it. You know, and if this company goes positive on the profit, you know, profitability, then it's going to be a beast. I mean, I could see it moving up higher, not going crazy with net. Amazon, always, you know, I deal with Amazon, so anyway, so I know what's going on with Amazon, and, you know, do a few shares here and there of Amazon, nothing major, you know. Invitae, NBTA, and this is another one of the ARC ones that Kathy Wood loves, and I'd like the chart. I'd never had a good position to get in on it. Where did I get in on this one? Basically right where it's at now, but I got in on it maybe like a week or two ago. More of a long-term play. And it's above the 50, it's above the 20, it's above the 200 moving average. So everything looks pretty solid, especially if the market, I think, is going to go up, over the next couple months, So I'm in pretty heavy. I mean, we were in about 20 or 30%. Now we're in about 80, 90%. I'll probably be close to 95% equities as of the end of the day. And I always tell you guys that when I do major stuff, well, this is the major thing. I'm diversifying the account more. I'm not just loaded in, 90% Tesla or 80% Tesla. We made a huge move on Tesla, and now I'm splintering it off, and I'm starting to look for other quality. I've been doing research for months on different companies. Okay, and so far these are the ones I like. As far as diversification goes, PLL is Piedmont Lithium, and it's the company that did the huge contract with Tesla. So I'm a big believer in that, and I've been waiting on this. I've been waiting to get into this for a while. Once it pumped up, I didn't really touch it, and then I just waited for it to kind of coil down and then show some positivity. And sure enough, it did, and we are in. And this should be going. I mean, you can see it's up 2% in after hours. And that's mainly probably due to Tesla. So I like the directional that this one's starting to head into. So we're starting a position in there too. Next one, Facebook. We've got about, not much, like 10 shares of, a couple thousand in Facebook. And this is just another, diversity play, really. So Facebook, they print money, so I'm not too worried about that. This is just like a balancing type of thing for us. Now the thing that I'm really getting into, and this is what I've been researching a ton. Basically, in my opinion, nickel, or the battery, I should say, okay, the battery is the new oil. Okay, in the next 10 years, everything's going to be moving electric. So, instead of just grabbing the companies like NIO or Nikola or whatever, some electric car company, I wanted to get in the ground, like who's producing the materials for these companies. So I started getting into a lot of the lithium and nickel companies. Okay, and honestly, I've just been diversifying because I'm not familiar enough with the companies yet. Like who's really winning the race? I don't know if there is like a who's going to win it. It's more like, which area of the world they're producing and whatnot, different companies. So I'm totally dabbling in with literally a bunch of different ones, Standard Lithium, North American Lithium, Canadian, Livent. Livent was another one that Tesla was dealing with directly. You can see they're up 1.3% in after hours as well. But this also broke the chart, and it's looking pretty solid. I think they're running a deal with Tesla as well. But even Vale, which is one of the biggest mining companies in the world. But what I'm seeing is the trend. I'm seeing the trend start to move positively. You can see most of the trend. Almost all of the trends. There's a few that are struggling, but I think that's more the company, But I think in general, you're going to see a lot of movement out of this whole sector. So that's my secret of what I'm doing. These are long term, and I mean like 5 to 10 years before you're going to see prices of nickel and the price, basically the prices of these companies being valued higher for what they're producing. And they're going to have to produce to meet all this global demand. So I wasn't going to pick just a couple. I was like, you know what? Let's just blanket it. Let's just cover it. I'm going to have a couple that are going to probably go under or fail, or maybe they get bought out or whatever happens. And I'm fine with that. I'm not investing like 50,000 in them. I'm just buying like, 100 to 10,000 shares, depending. A lot of these are penny stocks. I don't deal with penny stocks normally. But honestly, I could not find miners that or only a few miners that I want to even deal with that aren't penny stocks almost, 50 cents, a dollar, $2. So, I mean, if you're looking to get into something cheap and you only have a few $100 or whatever, this might be a good long-term play potentially that you can add to positions of. I'm not recommending any of them personally. I wouldn't, okay? I mean, versus like Tesla or something, I wouldn't. I would recommend if you have $500, put it in Tesla, not put it in, this is more of a speculative move. But I'm speculating that this is what's going to happen in 10 years. And, putting $20,000 in these companies is, to me, a calculated risk. So anyway, that's that one. But let's see, what else do we got here? And then here's another account. We have some Tesla shares here. We've got Net here again. We've got Apple, SI, Palantir, Google, Alphabet, Facebook, Enviti, and Space. Actually, I was doing Space. Space got hit a little bit because they delayed their flights or whatever. So there's issues, a little bit of issues there, a little weakness there. But in general, I'm diversifying here. So I just wanted to give you a heads up of kind of how I'm diversifying. 7 to 10, to 15 stocks per account that I'm managing. So back to Tesla, okay, and that's what we're here to talk about today. So for all you Tesla investors, we're looking to see, really what's going on, okay, and what I think is going to happen. And in my estimation, and this is kind of a guess, but I would think that Tesla by the end of the year is going to be somewhere between 500 and 600. Okay, I mean this is a guess. I mean I don't even know why I'm guessing, but this is just an estimation of what I think is most likely going to happen. It's either going to shoot up to 500, reject, hang around 500, or break 500 and head up to 600 and then bounce around from 550 to 600 or something and start, basically going sideways in the 5 to 600 range. This is what I think. I mean, this is by the end of the year potentially. Remember, we've got basically, I don't know. I mean, we've got over a month. We've got a reasonable amount of time, for this move to play out. But that's what I see. So basically, for me buying it for 60, adding another 100 shares or so, 50 or 100 or maybe even 150, if I cut back some of my other positions, possibly. I don't think I'm going to do that. But in general, let's assume for a minute that it does go up to 600. Okay, well, that's worth having that extra 100 shares running at it. That would be another $10,000 plus the 10,000, another 10,000 from the 100 shares that I already have. So that would be 20 grand right there. That would put us close to our goal, at least for the end of the year, which is 300K. So we're trying to hit 300. We're at all-time highs, basically. I guess we're going to be at all-time highs. Again, we've been bouncing around all-time highs for a couple weeks now. So, I mean, obviously today that will be, at all-time highs just because of Tesla moving up $4,000 or $5,000 or whatever it is. 112 shares times. That's what we basically have running right now. 112 times, what is it up now? $47 a share. Yeah, 5,200. So we should start off the day just on Tesla alone about 5,200. Assuming we balance out the rest of it, we'll see how it ends up. But somewhere between probably 4,000 and 7,000 today, which is a huge day. I mean, but mainly, obviously thanks to the S&P finally get included. But I mean, this was an inevitability. We knew this was going to happen. It was just a question of when. And I don't believe in just waiting and waiting and waiting. I mean, it could have been another 4 or 5 months potentially even longer before they got put on the S&P. So I wasn't just going to have stocks just sitting there waiting for this inevitability. When we've been making money basically every day this last couple of weeks because, now we're running long, even our, 401ks and, retirement accounts, they're also running basically 100% into equity now. basically ever since the election. I basically waited till the election, and then I basically just don't see any weakness, don't see any negativity to the market. To me, I mean, let's do that. Actually, I should have pulled that up before. Where's SPY? But if you take a look at SPY, I mean, SPY is breaking out. This is a breakout. W with a breakout. I don't see weakness here. I mean, I'm not saying it can't come back, retest 357. It could retest somewhere in 357, 358. But I think we're off to the races, honestly. And the Dow is the same scenario. The Dow's about to hit 30,000. And I was just talking to about it with Justin on Blaze Capital. You got to check his channel out, Expert Trader. And I watch his channel almost all the time. This is one of the reasons I don't post a lot of videos anymore. I'm busy doing my research. I have too much funds on the line, and I'm constantly having to do research, and I am super busy. So it's, I'm not trying to apologize for not doing videos. It's just can't do it. Okay, I've got too much on my plate. I'm doing my best, but when I make major moves, I try to let you guys know. So just for to support your own thesis or to help people in any way I can, but I can't be a YouTuber daily and come out here and do it. It's not my full-time job. I already have multiple jobs. So, and I'm just trying to do my best to help you guys to not make major mistakes and just to learn basic strategies in general. And diversification is a huge strategy. And that's what I'm trying to tell you guys here. You don't have to just throw all of your money on a couple stocks. You can have a stock that's just sitting there going sideways or down, and then the market could be going up for weeks and weeks, and you're missing out on that. You don't want to miss out on an up movement in the markets because you're not diversified enough. So I mean, we have software and automotive, and we have phones, cell phones. We've got banks. Let's see, another software company, and then we've got Google for search. We've got Amazon for online retail, Facebook for social networking. We've got Enviti. That's another one. That's I think it's genomics, actually. I don't know a ton about the company, and space as well. I mean, that's just for example, let's see. What do we got? What else do we got going? And ISRG, Intuitive Surgical. Okay, it's another one. And then we have all of our mining. So we're doing a lot of diversification here. So, and it's not too overwhelming. Yeah, we may not have the massive gains if we had just dump it all in one good stock and that stock tends to run, but there's also massive risk to that. So we're reducing the risks and settling for a slow growth, especially when we're in the middle of this situation that we're in right now, and still trying to deal with it. So there's no reason to go kind of ballistic just on one stock. That's just my opinion. I mean, if you want to load 100% of your money in one stock, go for it. But in the long run, you'll be punished for that. Okay. So, but anyway, you can see the Dow, and the Dow is super close. It's super close. I mean, I think the futures are down a bit, but it's super close to cracking that 30,000. That's a huge milestone. Huge milestone. So if it cracks, in my opinion, if it cracks 30,000, back test it, we could head to 32 to 35,000 pretty quickly. A lot quicker than people could imagine, I think. I've seen it happen before at 2,000 and 20,000. Okay, I've seen it happen in different spots. Let's go back. Let's go back to 20,000 when it broke. Holy cow! It went up 5% in a short period of time, and then ran all the way to 27,000. It basically went from 20 to 26. Can you imagine in the same scenario if it goes from 30 to 36 or whatever? That's crazy. And you can go back and see that at different levels where, I mean, it went from 7,000 to 18,000, or, I mean, granted it had some drops, but I mean, unbelievable moves. And I'm definitely not going to be out of the market if it goes from 30 to 35 or whatever. I'm not saying it's going to do that. It could easily turn around and reject 30 really hard and slam back to 25. Okay, I would basically renegotiate the whole portfolio at that, if it looks like we're seeing that weakness. I just don't see that weakness. This is my opinion. I could be wrong, but I mean, I think we're heading up. We're definitely going to head up to 30. It's a question of whether we really break it or not. We might hover 30 for a long time. You never know. We could go sideways on 30 for weeks, if not months, and then finally break. Never know. Or it could just break out anytime. So anyway, I wanted to cut that because I know this one's probably dragging along, but this was kind of important news on Tesla. But I also wanted to give you like heads up of what I'm doing, diversifying, and what percent we're in the market, which is about 90, I guess 90% now or so. We're going to be close to 100% in equities, and this is across the board, everywhere. So, and that's the confidence that I have. I'm basically 9 out of 10 bullish right now, and it's not because of Tesla. Tesla's got nothing to do with it. It's the market as a whole. I just don't see a whole lot of weakness versus the strength in the market versus the companies. The companies are pivoting really well, and they're managing this situation to their best ability. So, and they're cutting costs because they're not spending all kinds of money traveling all over the place. I don't think people are understanding the fact that companies are super lean and mean right now because they're not blowing off a ton of money. So, and I think that's why the market's going up in a situation where you would think it would just be going down the whole time. So, but anyway, that's my 2 cents, and I hope you guys enjoyed this one. And any questions or comments, go for it. I always try to check out everything I can. If you guys have any questions about any specific stocks, I'm a huge fan of PLTR and SI right now, and I'm planning on building long-term positions in those two companies. Okay, to diversify profits from Tesla into these companies, even though I'm going to be adding more Tesla even. So that's my plan, and I'm sticking with it for a while. We'll talk to you guys soon. Take care.